Good morning, greenies. How are we all doing today? Well, it seems there's as little hope here that there's going to be any Santa Claus rally. If there is, I think they'll find him slunched over in the sled, either totally inebriated or possibly dead this year. I don't know. I've been doing this a long time. I really can't remember if there's been a year where the market didn't rally at some point. Anyway, this one's getting a little late in the tooth. All right, we got the big event next week, and market sold off. Well, market went up first, making it appear that it was firing on all cylinders. And even I myself got caught in a couple of shorts where it looked like it was going to roll over at the appropriate time based on the 5-minute chart. And it just continued to march its way higher into the unfilled gap. Whereas once it got there, I did find a great short on SQ and a few other things that I did on my own and kind of redeemed the embarrassing performance in the earlier part of the day. But certainly things went down as anticipated that they should in the commentary pre-market yesterday. And now as the S&Ps have reached some, I don't know how significant support, but it's a focal point, being the low of the year. We've gotten some stabilization here. So we'll see what today brings. It could be a stabilization day. And, yesterday we looked at the weekly charts and went over areas of support. And, we thought that prices would come down into this area here. And I think that just as a final flush, we've got the big event tomorrow, the FOMC meeting at 2:00. Do buyers want to step up in front of that? Why not? I mean, maybe it just sets up a move up to kind of fill the bear fuel for a move to the downside. Mr. Schizo has kept us on our toes for large parts of this year. You can see over here this wild kind of stuff here, and then it tightened up during the summer, and then this move down, the wide whippy consolidation. And so now pre-market here, we've got some consolidation going on at the low of the year. It's a reference point of support, so it makes sense that there's some buyers here. And so we shall see. If this is just a choppy setup, I doubt it that we're going to get anything of significance to the upside here. And I always mark off our support. This is basically gone. And we've got that lower level there. And so in between here, is there anything? I suppose somewhere here in that last drop, we'll see if it rolls back over this morning. But, if we looking at these 2 days right there on this move down, I think we could say it's short-term extended to the downside. The selling at the latter part of the day did get climactic. Right? So you can see here as it was trending down, and then it went vertical to the downside. And so there it was, right into the area of support over to the left at a probable point where buyers would at least cover shorts, if not put on some speculative longs at the time. And those that did that last night, well, I guess if they're just overnight holds, they're definitely profitable, and possibly maybe they'll blip up a little bit more. We'll see. And we'll take a look at some of the other markets there. Good morning. And none of our friends there on YouTube, they're kind of quiet. They don't say good morning too much. Once in a while they do. Sometimes they give us a thumbs up. A few of them do every day. And we ask them to share the channel. And get a trial, but you guys that are listening out there, Dan and I give it our all with a lot of great information as insights that you could use. So, give us a thumbs up, and we appreciate that. And so let's look at the rest of what's going on here. Qs, same story, coming down into the support area. And we were thinking, can this possibly form a head and shoulders bottom? Well, I can't really say it's a head and shoulders anymore, since now it's retesting this low area. It's not a higher shoulder. Could it be a sloppy W bottom? Possibly. Well, I'll tell you, W bottoms, the way I like to see them, they don't form like this. Okay. The way they form is like this. It's a shallow retracement and a retest. And then you have some event, some type of pattern here that then prices have to clear this area, but the bigger pattern suggests that it can, and then it moves into a void once it clears here versus having a reference point up there. So this is a pretty much of a mess over here as well. And let me clear that up. And so let's see. But just looking at what is declining 20, declining 50. Both of them are under the 200, which is flat. It's not rolled over yet. But inevitably, if this keeps going down, it'll get the 200 rolled to the downside. And so now we've got a reference point of major resistance up above here. And what we'll just subjectively do, as we always do, can prices retrace even halfway toward that major resistance? If they can trade above it, well, that would be a significant event where it's broken the back of the downtrend. So that's a reference point to keep an eye on. I know it's far away, but that is a major resistance reference point. As we define it, it made a new low. And getting above that would break the lower highs and lower lows. Dow, boy, where's that going to stop? Let's look at the weekly chart. So it's right here, right? It's always just look to the left and see what's there. Get your Elliott waves, Gann lines, fib lines, dark cloud covers, your all that other stuff, Williams percent R's, and what do they have there? Jacomi clouds, and I probably destroyed that name, and pitchforks and all the rest. Just wipe them off of your charts and just look over to the left and see if there's a swing low. It'll work 99.9% of the time. Just that'll be the reference point where prices will make a pit stop in the downtrend and try and make some kind of counter trend move. So that's what's happening at the moment. We'll see if this little blip down here holds. This pattern suggests it's not going to, meaning it's had this wide whippy consolidation. It's broken down here. That's the first stop, right, along the path. And this kind of pattern historically goes lower. And so we'll see what happens. In any event, as always, we will look at this objectively. So, well, there's a swing high up there. Can it get back up above it? Can it even get halfway back along the way? Or does it just hang down here chopping, or just go down and do what it's supposed to do in a bearish trend? And so we assess that intraday and day by day at the end of the day to see what the battles between supply and demand have produced for us to read the tea leaves any differently. Bonds continue to move up, which means the yield curve is continuing to narrow. So as bond prices move up and short-term interest rates, well, bond prices move up, yields move down, short-term interest rates have been going up for a long time, and the Fed, if they're going to raise interest rates on Wednesday, that is probably all in likelihood going to bring these yield curves within dangerous levels of inversion, which is the zero line. Whereas we're looking at different maturities and different distances, 30 by the 3-month, 10-year by 5-year, 10-year by 3-year, 5-year by 3-month. Actually, this is 3-month. And you can see they're all narrowing and reaching potentially that inversion point. And when they do, we know that historically a recession has followed, and the lead time has been months, if not even a year. So the market will rally from there. It'll suck in the non-believers, and it'll show strength, and then it will decimate the unexpected that don't pay attention in the past when this has happened. And oil continued to fall yesterday, went below 50, had a little rally there, kind of coming back a bit. And we'll see how far that gets. Whenever I see a base like this in a downtrend, the obvious reading of that is weakness. It got extended, it tried to go up and it couldn't, and then it broke down. And that suggests it's going even lower. Now, with that in mind, God forbid this thing gets back up to the high of that red bar. If I was short, I'd be scared to death. If I had on a decent sized position, or if I didn't use money management, that kind of a pattern would be suggestive that shorts are going to be destroyed. And this would then rally from there. So keep that in mind. You're getting calls from relatives who want to know if they should get out of the market. Usually the first sign you're dropping the futures. Yep. And I've even gotten emails from subscribers late to say, you know what, Greg, love what you guys do, man, but I can't handle this market. You know, when things calm down, I'll renew my subscription. But for right now, get me the hell out of here. I'm leaving. This thing's going to hell. Well, I think it's kind of been in hell a little bit. But look, we are just going to assess what is. We're going to look at our market internals as we do. And as mentioned yesterday, at the end of the day, we had the lowest closing level of this put-call ratio since March. And that set a low. However, the pattern, as I explained at the time, was very different with this extreme amount of put buying at the time. So even though this is an encouraging sign and breadth has reached an extreme, and even our moving average of sentiment has touched the first level of bands here, which ultimately is giving us a buy signal or initial signal of a buy. We have no pattern yet. So we're keeping the powder dry as far as that goes. And I had to go back. Where was it? Well, back here in March of this year, where there was a further extreme. So here was one in July. It wasn't quite as extreme. And then back here in March, it was even more so. So maybe this is what's in the cards. But notice what happened here at that time. And I think I remember explaining that this is what would happen at this time when we got that low. I said, and this kind of breaks off where we don't get the data from eSignal. But what had happened at the time, and I said historically, what typically happens, and it did happen, was you start getting this kind of a divergence. So it reached an extreme, the moving average at that time. Breadth is the one that gave us the divergence, meaning there was relative strength happening at that time in the market. Some stocks weren't going down as much. So if that is going to be what's going to unfold, what we would look for here, right? We always look for recurring patterns. What we would look for here is, right? So this goes down, right? This reaches an extreme. We get a rally of some sort, and then it comes down again, and then we'd get that divergence, and then maybe a rally gets going from there. But just remember, the trend is down until it's not. What are you asking me here? Quiz, do you use internal suggest bull positions? Yeah, I use not the VXX, but the VIX itself. Who's dared to call me? Maybe talk to them. What are they calling me now for?
Who's this?
And so, I'm not to go over too much at one time here. Pre-market, it's already 20 after 9, but look, I've never missed a bottom. That's for sure. A few tops are a little hard, but over the few decades I've been doing this, I've never missed a bottom as it shed up, because my internals never miss a bottom. And I'm not going to miss the one that comes up this time either when it does set up. So, all right. So there's our internals and gold. Down a little bit, doing what it's doing. You got to keep an eye on the dollar here as well. And seasonality. Gold has a seasonal tendency to move up at this time of year with people buying gold for the holidays, and so we'll see. But just for currency traders, the euro did had a bullish gap up yesterday and cleared the top of that base. So that's something you want to keep an eye on. That's what the dollar's doing. And the pound had a little bit of a rally, and the Aussie didn't do much of anything. Canadian dollar just in a nice steady downtrend. And the yen had a nice little pop there as well. And so now we'll see what moves here in the markets, what can get going, if anything, what stays weak. And we'll figure it out as we always do. That's it for me. All yours, Dan.
All right. Thank you. Good morning. Yeah, you kind of missed my quiz question and nobody else answered on VXX.
Too early for quizzes for me, Dan. My brain isn't in total go mode yet.
Same with Pat. Pat gets tired of my quizzes. But here, let me mention it. Here's the VXX, daily bottom left, weekly on the right. The pattern, it's the VXX, so it's a different animal, but the pattern totally looks higher. We had a greater than 100% retracement, bullish consolidation, breaking out, big bullish engulfing. But the way we teach this is you must take your signals on the spiders. And yes, the spiders reverse lower. And yes, we predicted a washout and lower prices. But, there was somebody sent me a letter today where another service is saying, if you think the VIX is going to stay at these new high levels, and if you were to buy volatility, you wouldn't with the gap up here, of course. The time to do it was last Friday and yesterday. It's a short-term trade. If we think that the market's going to wash out and give us that tradable bottom, so my quiz to you was, to everybody was, look at the internals that you just showed. They are very oversold, and we're watching them for a turning spot. This is the worst time to be taking bullish positions on the VXX. You're better off doing what we're waiting to do, which is short the darn thing when we get our washout. So that's all. We have very light inventory here. Twitter, we have a put spread way the heck down here. Mighty Mo, we're short stock, and I tightened the stop yesterday. Facebook, we had to put a call spread rather, and we'll just manage it. We had a third max profit into the close yesterday. It's gapping up here a little bit. Major resistance overhead. Fleur, we're short stock, and I tightened the stop. UAL, we have a bear call credit spread, and I tightened the stop. So all our opens are fine. Let's look at a couple gappers here. This under 10 bucks. I don't like the way it trades, but that's a bearish gap. And sorry, Barb. I got some construction here, putting new doors in, so if it gets too loud, I'll just mute it. Sorry about that. CBS, you know, all I did was pull it up to see if there's a pattern here, because the former CEO is not getting a severance. VLO, the oil ETFs are very oversold, but we're looking to. All right, Greg, we'll worry about it tomorrow. VLO, nasty downtrend, but when we do get a turn in the oils, I'm going to be looking for anything showing relative strength. I actually remember this one. I remember some hedge fund guy, whatever, saying at 115, maybe 110, saying, "Oh, I think it's a good value." I mean, I don't know what he did, but look at this weekly fall. Marin here, it's gapping up, but it's junk. Shop, gapping up, but nope. You could get a day trade out of this. Look at this hourly. It's a gap up from an hourly climactic buy setup. Let me go back to the 15. Yeah, that's not clean. I don't like it. J&J, I sent out an alert to our weekly options traders. And I told you yesterday, 100% implied volatility. The tornado is right offshore. That's what makes implied volatility skyrocket, which gives us fantastic premiums on selling out of the money puts. But we obviously don't catch a falling knife. We wait for a reversal. And this could be the first sign of our reversal. Oversold 15-minute, got above the gap and above the 20. So now I have a higher low. Nice. And this wide range bar happened when the plaintiff's attorney was on, and you know, those jerks, they're just all about money. And I don't know what he said, but I think it was something like, "Oh yeah, we're open to settling," whatever, you know. So I have that on my radar for a put spread for Friday only. And J&J, I think, is going to be on its own page relative to the market. So I would not mind entering that put spread for Friday ahead of the FOMC. NAV had earnings this morning, 27.20, gapping in a downtrend. We'll watch it. Oracle earnings after the bell yesterday, $48. That's a bullish gap. I'm going to put that in a window over here. Maybe 30-minute high. RCII, it's not earnings, but it's in pain. It was actually a bullish weekly. That's an ugly gap. BECN, that was just leftover from yesterday. Tellurd, NTs. I'm still watching this as a put spread candidate. Excuse me. And we nail it. We had a beautiful 3-day put spread. We closed it out right at 5 cents a share. And we were doing exactly this, waiting for a pullback to do it again. So I like that as a watch. Sienna, I was watching into this pro gap, and it's coming in hard. So I'm not going to rush. But once we get a bullish reversal, I'll be watching that. Box turned to garbage. Mighty Mo, so USO again. Yeah, broke down yesterday. So that's an ugly crack. And now we're either going to wait for a new setup to let it get more oversold, or some type of shakeout breakdown failure. UNG, we had a beautiful call spread. I'm seeing some gaps in the marijuana stocks. Look at Tilray here, pre-market pop. And look at the gap here into yesterday's bar. And this is getting to be climactic. So Tilray is a 30-minute high watch. Let's look at some of Tesla, nothing. GE still a dog. Well, GE might be a small little cup and handle. we'll keep an eye on him. Google, garbage. Amazon, 30-minute high. Look at the pre-market consolidation. You got resistance here, and that's why I wouldn't rush into it. I think we're just in day trade mode here again until, you know, after FOMC. Apple, still there's no potent turn yet. Intel, total garbage. This looks like, and we've mentioned this a few times, this looks like an iron condor candidate, which is define points of resistance, define points of support, relatively flat MAs. Well, you know, with volatility spiking, we should take another peek at that. But we have the risk of FOMC. I was watching this little NDEV here. This was our beautiful entry right here. Right here. Look at this kind of pseudo 1, 2, 3, a gap down reversal to support. And we didn't pull the trigger. Microsoft, bullish gap, but that could be a 30-minute high. That could be a day trade. Right here at the 200, you got increasing volume. MJ marijuana sector, still no reversal. All right, so I don't have much at all. Let's see what the premiums on J&J into the close yesterday were very juicy. Let's see how much they contract. Ooh, they got cut in half. The 125s were over, they were $1 and change, and now they're 40 cents. All right, I'm gonna mute this for a minute. I got that saw going.